You're looking at gains across the board as Fed Chair Jay Powell wraps up his press conference. Now, we heard a number of things from the Fed over the last hour. The Fed holding steady on rates, also on bond purchases. Fed Chair Jay Powell saying it's still not time to talk about tapering. But the Fed, though, did raise its expectations when it comes to the economic recovery. Powell saying that the recovery is picking up much faster than he initially expected. So the Fed upped its GDP forecast here to 6.5% this year. That's up from its initial expectation of 4.2%. I want to bring in my co-host for the next 2 hours, Jared Blikre. He is in for Adam Shapiro today. And Jared, taking a look at the market reaction to this, it looks like investors are very happy with what they heard from Powell and from the Fed today when you take a look at the fact that we're not too far from those record highs.
Oh, record highs. We got a pop in the Dow that sent it to an intraday record high right after the announcement. S&P 500 joined the party a little bit later, so it is risk on. The Fed's exit date on low rates, it's not shifting. The median summary of economic projections says now that it's going to be 2024, so kind of ceteris paribus there, but stocks definitely love this move. The VIX is below 20 again, 10-year off a little bit on the news, not really giving the market any headaches. And guess what? Powell refused to answer a question and politely asked if the person would like to ask another one. Never heard of that before. But Brian Cheung, guess what? He got an interesting question on infrastructure spending as well. And I know we're going to hear from him in a second. But the moves are higher in the risk markets. Definitely loving that action today.
Yeah, Jared, we want to bring in Brian Cheung. He is now joining us, of course, just asking Fed Chair Jay Powell that question on fiscal spending. But Brian, we can talk about that and then also just give us just your biggest takeaways of the day, because it looks like investors are very happy. That's what Jared was just saying, this risk on trade that we're seeing in the market today. And clearly investors are happy about the fact that we likely won't see a rate hike at least through 2023.
Well, it's a risk on trade, but I think that the more important thing to look at is that bond markets aren't too roiled by the announcement that the Federal Reserve had, and then consequently what the Federal Reserve chairman said over the last hour in his press conference. There was a lot of concern that maybe the Fed would do something either with the dot plots or with Chairman Powell's communication in the press conference that might reprice the bond market's expectations for where rates will go. So when you look at the 10-year hovering at about 164 basis points, which by the way is actually off the highs I think that we saw through the day, it does show that bond markets kind of had the right idea, or that the Federal Reserve did what the bond markets wanted to see heading into this meeting. And a lot of that owed to the dot plot projection, which shows the median member of the Federal Open Market Committee still seeing the case for no rate hikes through the end of 2023, despite the fact that the number of participants on that 18-member committee rising from 5 to 7 in terms of the amount of people that see at least one rate hike through that period of time. That's how they were able to square the overall broad improvement in the expectations for the economic recovery when you look at GDP, when you look at the unemployment rate, and when you look at core personal consumption expenditures. Now, the question that I had for him was kind of specifically about fiscal spending. We have to remember that the last time we saw dot plots, the government had not passed either the $1.9 trillion or even the $900 billion stimulus packages. So those obviously factored into the improving outlook. But he had an interesting response to another reporter's question where he said that there could be an argument to pass more stimulus when it comes to specifically infrastructure to avoid more longer term damage to the economy. So I elaborated on that and said, does that mean we have the fiscal space to be doing that spending? At which point Chairman Powell kind of backed off a little bit and said, I'm not trying to tell Congress exactly what to do here. I'm just saying my vantage point on the economy. There could be something more to be done, but I'm not going to tell Congress at all what to do. So a lot of interesting commentary there. But again, from the Federal Reserve, no change to the policy itself, even though this was a very closely watched meeting today.